All right. I'm going on a minute early. How's everybody doing? Bobby Piton here with PreActive Investments. How you doing, Patrick? Hi, Jose. And let's wait for a couple more people to come online, and then I want to go over a handful of things, and then I want to talk about a process to bring people up to speed on the state of our economy. And I think it's extremely important, and I do believe that uh, which I'm not sure. I didn't see a Wall Street Journal story this morning. China bets after Beijing crack. Yeah, in terms of China, I'm not going to discuss China today. I do think that they're trying to do some things for other reasons that are more political. As we know that it's a controlled economy, it's a communist economy, and as a result, um, they don't. They don't really care about transparency and doing honest things from an economic perspective. It's all made off of political thuggery type of decisions. And so this is what's going on with regards to China. But one thing I do want to say is that there's this infrastructure bill, which, if you guys recall, the initial infrastructure bill that was being floated was about $2 trillion, right? The first one. And then the number dropped to 1.2 trillion. And now the number is coming in at 550 billion. Okay. So 2 trillion, 1.2, 550 billion. Now that's still a tremendous amount of money, but to get cut by 75%. Now what got cut, right? A lot of things got cut with this so-called Green New Deal. So they went to shut that down, which is great. The only thing that seems to be being moved forward is true infrastructure, which is it's a wonderful first step. There's still a lot more to go, but the $550 billion bill, 110 billion, so only 20% for roads and bridges, 73 for the power grid, right? Probably to harden it from any type of EMP attack, if I had to guess. 66 billion for rail, 65 for broadband. We probably do need improve our broadband communications, maybe as a defensive measure from any type of strike and so forth. And so I'm not sure what exactly is going to happen with regards to this bill, and how much of it will make it through the final cut. And I know there's talk that they're going to try to raise it, but I do think that we need to stop coupling in a bunch of things into these bills, and as they're trying to do to cover up other type of misspending or malinvestment, as they would say. Right now, this thing is supposedly 2,700 pages long. So if you could believe that, 2,700 pages long. So obviously there's a bunch of micromanaging taking place by the federal government, which is never a good thing. I mean, we should definitely, if the federal government is going to spend some money on something, there should be guidelines with regards to what's expected, what's the expected deliverable. Like, let's just say the number of miles of road produced, that would be a deliverable, or the number of things, what's it cost per, whatever 100 feet of bridge that's being reconstructed, and then have different benchmarks for what's expected, to be spent, so that we can gauge whether or not the money is being siphoned off and squandered. Okay, so that's that. There's this woman who's on the Federal Reserve. She's someone that was put in by, I think, Obama. Her name is Lael Brainerd, and she supposedly is the top contender to replace Powell, possibly as early as this year. So time will tell. But what I think is extremely disturbing about this potential choice to replace Powell is she wrote a book in 2009 about climate change and global poverty. So once again, climate change and global poverty, trying to push this narrative, this narrative that, I happen to think that there's a lot of misinformation in this narrative. There's other people that might believe it's there. All I'm saying is we should have a much more frank and in-depth conversation looking at the data. I do think that this whole narrative is being pushed for power and more power over us, and wanting to control any future competition of any companies that are coming into the pipeline, so that you know they have a disadvantage against the global corporations. And so I do think it's a serious issue. And she was the Undersecretary of Treasury for International Affairs under Obama between 2010 and 13. And so this is a very serious issue. And so I think we need to keep an eye on it. And I'm not sure when the public is going to wake up and realize that some of these people being placed into positions of power that have a massive impact on our well-being, that we don't get more involved and organized to offset some of this. So the July PMI came out, and with regards to the PMI today, it did come out a little stronger than expected. We're definitely in, that's the Purchasing Managers Index. So it came in higher than expected, 63.4. I'm sorry, the ISM Manufacturing Index came out at 59.5, so that was below average. The market manufacturing PMI came in a little higher at 63.4, but what came in a little light was construction spending. Now, keep in mind, it was still positive, but I think what happened, if I had to guess, is some people pulled back until prices corrected themselves a little bit, which they have started to correct themselves. And one other thing that would kind of hit that top line number is the fact that prices were coming in for some of the material costs. So if the expectation was 0.5 on construction spending and it came in at 0.1, but prices, for example, for lumber and other types of input items fell 30, 40, 50%, it would make sense that that number came in a little lower. It is strong nonetheless. I agree, Patrick, that is a really good number. So the economy is definitely doing exceptionally well. A lot of things are showing up with regards to the corporate profits have been on fire and so forth, and things are going well. So let's I'm not sure about stagflation, and that's a good segue into what's next, folks, because as I mentioned before, I go into the economic reports to the president, and I highly recommend it. In fact, I'm probably going to download all these things because I'm a little worried the government may try to get rid of them and hide them, which is extremely concerning. And let me explain why. Some of the numbers and some of the metrics that were kept track of are disappearing, and in different types of reports. And I like to go back and look at older reports to see if any revisions were made that I need to kind of look at on key variables or metrics that I look at. And so what I did is I wanted to see what did the economic report of the president look like before Bush, George H.W. Bush got into the White House, and then obviously that was in '88, and then Clinton. I think he was sworn in '89. He won the election in '88. Then Clinton beat him and was in the White House for 8 years. And then another George Bush, George W. Bush, was in for 8 years. So between two families, you had the White House controlled by two families for 20 years. And so I was curious, what do the numbers look like, right before George Bush got into office, the first George Bush. And so I looked at an economic report to the president under Ronald Reagan, and I pulled down some numbers. And I want to kind of share some of these numbers because they're definitely very fascinating. And I think that this is going to be an ongoing type of thing. I want to understand how they're kind of redoing these numbers. And I do think they're doing it for not such good reasons. And maybe this is what we're in the middle of, with regards to trying to figure out why some of these steps have been taken and some of these things have been done at us from an economic warfare perspective to maybe cover up some of these past misdeeds that have transpired. So what I did is I went and looked at the older report, the 87 report, and in that report, there was national income in the United States in 1939. So I'm going to kind of give you guys some ideas. I took the national income number, which is, how much do people make if that actually work, right? So the people that are working in the economy right now, and then national income is going to be also what's left over, corporate profits. What's kind of like capital's share? So like how much rental income is being generated, how much profit from companies is being generated after people are paid to work, right? And that relationship between wages and national income, since 1939, it's kind of bounced around. It was as low as 66% in 1949. And then it kind of hovered between 72, 73% for like 40 years. So that number, believe it or not, has been around 72, 73% for 40, 50 years. The ratio of wages to capital, okay? And corporate profits back in 1939, this is an amazing number to think about. It goes to show you how much they've inflated away things, was $5.5 billion. So in 1939, corporate profits for every single man, woman, and child in America was about $42 per person, okay? There was a population of about 130 million Americans back then, 1939. So then the profits, the average, the income, like what was the national income for the entire nation? And you divide it by everybody, just assume everybody was working. That number was about $368 per year, or about $1 per day. So I want you to think about this. If we can go back in time, about $1 per day was made by every man, woman, and child in the United States. Now, keep in mind, folks, back then you could buy a house for like, I don't know, $3,000, $2-3 grand. So it was a different time. And this is when you hear about the nickel for a loaf of bread. If you're making $1 a day, I guess you can say a nickel was still pretty high. Obviously, I got to look at the exact time, but Henry Ford shocked the world when he went to $5 a day for an auto worker, right? Now you can understand why. Because back then, to go from making $1 a day and then going to $5 a day was truly a massive move relative to what was happening in the country. Now, keep in mind, this is per person. So, there weren't as many women working back then. If maybe, this was right before World War II. And so if you think about that number, you'd probably need to multiply it by 3 or 4 because the workforce wasn't as large as it is today. And so, you're talking about, the average person back then was probably making $1,000 to $1,300 a year. And if there was a family of 4, or so, that would come out to about $368 per year per person. Okay. So now the profits that were generated in corporate America, when you took them and you divided them by the national income, it was about almost a 9-to-1 ratio, 8.76 to 1 ratio. That's what was maintained. Okay. So I want you to think about that number for a second. So if people were working, and let's just say you had your own business and your business had payroll of, $900,000. We'll just round it to 9-to-1. And the business had payroll of 900,000 and your company was doing 2 or 3 million in revenue. You would make about $100,000, for rent as well as your profits. That's what that ratio kind of signifies. What's the amount of profits divided by, what is the amount of payroll paid to profits generated. So that ratio, 9-to-1, that's what was the relationship. About 70% of all the country's wages, 72% went to workers and 28% to capital. So that's kind of what the ratio looked like for a good 50 plus years in the United States. Okay. And I kind of went through this and looked at it and pulled it down from the economic report because I wanted some perspective as to what the number looks like now. And once I kind of did this, corporate profits, um, you know, shot up. Now, keep in mind, I'm not adjusting these numbers for inflation, folks. It went from 5.5 billion to 28 billion and 49, and then 59, it doubled, almost doubled to 51 billion, 69, 87 billion, 79, 200 billion. So then the numbers kind of keep climbing with inflation. Okay. So now keep in mind, the profits as a percentage of national income. I kind of looked at that too, just corporate profits in the U.S., not rental income, was about 8%. So one out of every $8 generated went to corporations. That number dropped in 1949 through 1959. Ironically, it dropped to about one in every $8. So corporations were pulling about one out of every 8, down from 1 in 13. And so people were not getting as much of the pie, which is an interesting thing because I always seem to think that in the 50s and 40s, late 40s, early 50s, and so forth, I thought people were doing well and they were making more of the money. So maybe the only thing I can think of is maybe as Europe was being rebuilt, global trade took off. Other countries that were devastated by World War II were being rebuilt. So American corporations were doing really well. So they were making more than the average American, even though Americans were doing well too. I'd have to look at that data. I'm just curious. But that number it really shot up. To go from 8 to 13% is a huge number, 5 full points of the economy. So as I was looking at this number, I went to 1987, right before this whole thing took place with regards to, you know what, Patrick, you know what would probably help account for it? We did have a labor supply shock. So when people came back from the war and there was women that were working in the workforce, there was pressure on wages. So we went from a single household, single income earning household to 2 people working. So that would make sense as to why profits would initially shoot up, because you could pit labor against each other. So that might be why, Patrick. I think you're right. Women, when they entered the workforce for World War II, they didn't leave afterwards. And as a result of not leaving, there was a labor supply shock to the system, which would definitely make sense as to why corporate profits were higher. I'm just curious what those numbers look like and what kind of drove them back down. But so I kind of looked at these numbers from 1939, then I went all the way up to 1987, right before Bush won in 88, and the national income of the United States was about 3.7 trillion back then. Wages were 2.7 trillion. Okay, and so 73.33%. That's how much of the money people are getting. What I find fascinating about this is when Reagan took office, the average wages, the wages of the United States, between that 8-year period, 7-year period of Reagan, they went up by over 80%. So wages went up by 80%, almost doubled, which is unbelievable. Like in 7 years, 8 years, to have wages double, not exactly, but almost double. Whereas corporate profits only went up by about 56%. So that was pretty interesting, because corporations made a tremendous amount of money in the 80s, and the stock market was one of the best we've ever had. I think the stock market quadrupled in that 10 years. But Americans really, really prospered. Yes, they did, as we cut the size of the government, and the Federal Reserve did the right thing back then under Reagan. Reagan wanted them to break the back of inflation. So in this number, I mentioned that profits as a percentage of national income peaked at 13%, 1949. They were at 12.5% in 59, 11% in 69, almost 10% in the year 79. And then they fell all the way back down to 8.5. But here's what's interesting is that ratio, remember we were talking about how much goes to labor versus capital, that number dropped from 8.76, that almost 9-1, to 5-1. So think about that for a second. It, so for every $500,000, what I was telling you, $900,000 of payroll, 100,000 went to corporations. Okay, back in 1939. And then when we expanded the labor supply of the country, that number fell to 500,000 in payroll, 100,000 to corporations. So think about that number. You sit there and you're like, wow, why do two people need to work? You ever wonder that question? There's a lot of people that are like, why do we need two people working in the household? Well, this shows you why. Like, you can see for yourself, the number, the payroll number, the amount of payroll that needed to be paid relative to the amount of profits generated almost fell in half. It went from 8.76 to 5.07. Now, keep in mind that number stayed at about 5.5 in 59. Then it creeped back up to 6.6 in the 60s. Okay. Bread and butter, right? Guns and butter. That was the 60s. And then it went back to about 7.5 in 79. And then all of a sudden, under Reagan, and that's between 79 and 87, it went up to 8.6. So by the time Reagan left office, he had almost taken the ratio of wages in this country to how much profits were being generated back to what they were in 1939. I think that's super fascinating. I did not know that until I looked into this. And I'm going to get into why I looked into this today, because there's some talk about us defaulting on our national debt. And if we don't get something passed, they're going to default on our national debt. Now, for anybody who's been watching me over the past 6 months or so, I have said that I think a lot of the debt is fictitious. And I've said that multiple times. And in fact, I've been arguing that we should have a debt jubilee for the government, not for people that own the bonds. But I do think that a lot of this stuff is fictitious. So even writing down all the fictitious debt, not the debt that actual people purchased, would probably be a wonderful thing for the economy. But I want to kind of go through some numbers, and this is going to help you understand why I've made these statements in the past a little better, if you've heard me say them. Okay. Back in 1989, so then this I looked at what happened right when Reagan was leaving office. What the heck was going on in the United States? Well, right when Reagan was leaving office, there was about $2.7 trillion of national debt. Okay, back in 1989, $2.7 trillion in national debt, which is pretty amazing because over the span of 4 years, I'll never forget it. I did a book report on it back in high school. Actually, I did a presentation. Reagan just went crazy with defense spending to bankrupt the Soviet Union. We spent $1.5 trillion over a 4-year period. It was unbelievable, almost 8 to 10% of GDP back then. And I remember doing this report, and I was arguing it was the right decision to bankrupt the Soviet Union to increase the national debt. I'm not the national debt, but defense spending. Okay, so back then, 800 billion of this 2.7 trillion was owned by the Federal Reserve. Okay, it's an interesting number. The American public had about $2 trillion of debt. Okay, so $2 trillion of debt, and we had the debt as a percentage of the amount that we spent. So the United States, we had spent about $1.1 trillion back in 1989. So that was the size of our budget. So I want you guys to think about that number, because we were spending as a percent of our national debt. We were spending about 42%, okay, of our national debt. To give you, so 42% of our national debt is what we spent. Okay, back then. And I like to look at these types of ratios. By within the next decade, the national debt went from 2.7 to 5.6 trillion. So it doubled. It more than doubled. 2.7 times 2 is 5.4. So it was at 5.65. So it more than doubled. The Federal Reserve almost tripled. It went from 837 to 2.48 trillion. Okay, 2.48 trillion from 837. Now, this is on the government reports. This isn't my numbers, by the way, but just to make it clear. The public's share of the debt went from 1.9 trillion to 3.175 trillion. So it went up, what are we talking about? About a little over 60%. Okay. But the Federal Reserve tripled during that time. Now, the government outlays went up by about 50%, which is interesting because we actually were running a surplus back then. So we go up by basically 50% on how much we're spending on the government. The national debt doubles, but we're spending 50% more. So you're like, what the hell is going on? How do we have the national debt double, right? We're spending 50% more. So something, obviously rates were different. We'd have to look at interest rates. I think the rates were maybe 5-6% back then. And so, Patrick, I'm not sure if they're on the Fed's books. I'll have to look at it. But it is kind of interesting because these are different than some of the capital accounts that I've seen on the Federal Reserve. I'm just going off of the economic report to the president. So I haven't taken the time to reconcile all these different reports. You got to remember, each of these reports is about 400 or 500 pages. And so you can go through them pretty quickly if you know how to look and how to find certain data sets. But it's a tedious process. And going back, 30, 40 years, if I were to go through each and every report, you're talking about tens of thousands of pages, folks. It would be a very, now not worth the statistical data, but I mean, if you were to really read it and see what they were doing, it would take a tremendous amount of time to do it. I mean, literally, it could be a full-time job for one person for a couple of years to really read and understand all this stuff. And maybe this is what they're counting on, right? They're counting on the fact that nobody's going to look at this stuff in the private sector. And maybe there are a few people, but I sure as heck don't hear a lot of people talking about it. So I want to go over something that's really, really disturbing now. Okay, so we kind of just wanted to set the groundwork for this. Okay, and I need to give you guys all some context. Okay, so between the year 2000 and 2021, our population in the workforce has grown by about 0.5% per year, actually 55 basis points to be exact. So our population in the United States that is actually working, the number of workers that have been entering the workforce is less than 1% a year, 55 basis points per year. It's just over 0.5%. Okay. Now, this takes into account population growth and everything. So all things equal, if we had a world of no inflation, and we just had 0.5% of people working every year. So for every 200 people, we had, approximately one person, a little more than one person enter the workforce. Okay, for every 200 people that worked every single year on average, that was the ratio. And during a 100-year period, the productivity of this country was about 2.1% per year. So every year, we were 2% more productive, 2.1%. So that means every 34 years, we doubled how much we produced. That's the rule of thumb. So if we can double our production, we were able to grow at 2.1% per year. And on average, everybody in the economy working together is about 2.1% productivity growth per year. Okay. And so if you take 2.1 and you say, okay, 0.65% as well, 0.55% as well, obviously the growth would occur on who enters the workforce too. We don't need to do that. We're just going to say 0.55 plus 2.1. That means that the economy back in the year 2000 was 8.8 trillion. That's how big the economy was back then. And if you grew it at 2.65% per year, where would it be right now? That's a good question. Well, that number would be about 15.3 trillion. So the economy would have grown from 8.8 trillion to 15.4 trillion. Okay. So what does that come out to? That's that 2.65%. During that time, the mortgage debt of this country was about 6.18 trillion, and now it's a little over 10 trillion. So the mortgage debt of America went up by about 62%. Okay, so I want you to remember these numbers. So you're like, okay, Bobby, we grew at 2.65% per year, and since we grew at 2.65% per year, our economy went up by, it should have gone up by about 73% over a 21-year period. So our economy is 73% larger. This is, once again, assuming a world of no inflation, folks. Right now, I'm not assuming any inflation, but it grew by 73%. The debt, believe it or not, 6.1 growing to 10 trillion. The debt didn't, the debt grew by 62%, right? So the debt went by 62% for the average American, and the economy is 73%. So we're better off. We've been spending less money and we have less debt, right? We've been making more money and we have less debt at the end of 21 years. It's a very good sign. Americans were frugal with their money, regardless of what they say. This is what shows up in the numbers, okay? So now let's look at the national debt. So the national debt, I just pulled up the numbers earlier today. The national debt of the United States, okay, this is going to turn your stomach, okay? I'm giving you guys a heads up right now. It's gonna just turn your stomach if it does anything that it, like what it did for me. I told you it was at 5.56 trillion 21 years ago. They're saying the debt is at least 28.5 trillion now. So the debt, the national debt, they're trying to tell us, okay, that the debt went up by 8% a year for 21 years. That the national debt is almost, it is. It's 5 times larger. Okay? I want you to think about that number for a second. The national debt is 5 times larger than it was in the year 2000. $28 trillion. Now, what's crazy about this number is when I ran the math on this, just real basic stuff here, okay? And I said, okay, how fast did the economy grow? Because what they're trying to tell us is, Bobby, the economy is not at 15.3 trillion because we had inflation. So what is the economy at? It didn't grow at 2.65. It had to grow plus the inflation rate. Well, it grew at 4.3% a year for 21 years. If you add in inflation, it should have had real growth of 2.65, but inflation was 4.31. So voila, inflation averaged 1.66% per year. That's what the inflation number. Inflation expanded at 1.66% per year for 21 years, okay? Because they're saying that the economy is at about 21.5 trillion, not the 15.3. So you can see that the effects of inflation are to add just over $6.2 trillion of fluff. $6.2 trillion of fluff was added in there, okay? So I just decided to say, if the national debt of this country grew at the pace of the economy plus inflation, okay, plus inflation, if the national economy, if the national debt from 2000 grew at 4.3% per year, it just kept up with the pace of the economy, even though we had a situation where there's 1.66% of inflation every year. So we added on national debt tied to the inflation number, right? And that number we come up with is 13.7 trillion, okay? 13.7 trillion. Folks, they're telling us that our national debt is 28.5 trillion. So when I've said the national debt, I do not believe that it's 30 trillion, almost $30 trillion. I said, I think it's overstated by 13 trillion. I have to revise my number. I think it might be overstated by almost 15 trillion. $15 trillion. So when I hear Trump, when I first heard President Trump say, we're going to get $10 trillion back from China, right? First thing I was thinking is, that's pretty funny. My number was, I think, 12 or 13 trillion. So I think this, so where am I going with this? Because when I am seeing the news story today that we might default on the national debt for the first time in the United States history, and I'm sitting there thinking, are we really defaulting if half of it's fictitious? If half of the damn debt isn't real, are we really defaulting? Who the hell's saying we're defaulting? Because if you look at the past 21 years, the numbers do not make sense. They just do not make sense that this money was spent. If we really were spending $1 trillion more every year on average than the economy, that's what they're basically trying to say, all in with interest and the compounding effects and everything. But for 20 years, they're saying they're trying to tell us we added $23 trillion of debt. So I'm just doing a simple mathematical average, folks. I know the compounding effects would change that number, but these folks are trying to basically say that we spent $1 trillion more than we did. I do not believe it. I think we need to audit all of this stuff. I think that based on what we've seen with other fictitious numbers, I think you guys know what I'm talking about, that these numbers are lying. They're all made up. I think they're all made up. I don't think that there's any way that the mortgage debt of this country goes up by 62%, but the national debt goes up by 500%. It doesn't make any sense. It makes no stinking sense. If that money, let's think about this logically, folks. If we were really spending $5 trillion, the national debt goes up fivefold, and all that money was going into the economy, right? All this money was flowing into the economy. Do you really think that prices wouldn't be 5 times higher than they were on everything, right? So this whole inflation rigmarole that's happening, they might be trying to cover up these past crimes. I mean, that's what it feels like to me. They might be trying to inflate some of this stuff away because they know they got caught. And I think that this whole thing is all coming down in the past year or 2 years, that they've been cooking the numbers. And what I could tell you is this helps definitely explain why there's been a very strong bid in asset prices of companies. Because if the national debt is overstated by $10 trillion or more, President Trump keeps saying 10 trillion, 13 trillion. He says China's going to pay us. How do we know that these guys, China might be, like when he says China's going to pay us this 10 trillion, maybe a lot of this money that was maybe they issued a lot of these IOUs and the money wasn't spent here and they just moved it into China. Maybe we funded all the build out of China. So now President Trump is saying we're taking that 10 trillion back. That money was never spent on US soil. It was spent in China. And which would help explain why there wasn't inflation, which would also help explain why this trade deficit with China of 5 trillion, how do we know that was real? Maybe it was never real. Maybe that number was always flat, because they're basically saying the trade deficit with China the past 25 years or so is $5 trillion. I don't know if we received all the goods. We always assumed they were telling us the truth, but what if they haven't? What if these were all accounting tricks? Maybe the deficit with China was 50 billion a year, not 300, 400 billion. I don't trust any of these folks anymore, because these numbers don't tie out. They don't make sense. If all this stuff was truly coming into the economy, the growth rate would have been much higher. It would have had to been much higher to show this kind of growth explosion of the debt. And it's not there, folks. So here's the deal. I apologize that I'm still waiting for YouTube to get me listed on here. I'm going to upload this video to that YouTube channel. The other thing I'm going to do is when I am back on there and I figure out, I'll get StreamYard going again. I want to show everybody these data sets. And on some of this, I think we can be downloaded on Economic Report to the President. I'm going to try to make sure I get it. I share the links, in the description, and show people where to go pick up the data and look at this for themselves, because I think this is the next big thing that's going to happen. I think you're going to see a real in-depth evaluation of how much debt is really real, and how much we've been lied to in a lot of different facets. Because if they're lying on this national debt stuff, which I think they are, what else? What else are they lying on with the state debt, with the local community debt? How much of that debt is being lied about? And I've kind of heard some things here and there. I just want to make a couple things clear. There's a lot of people that are saying, all of our institutions are corrupt and broken, right? I don't like to say. I don't think we should say that. Our institutions are not the problem. We had great institutions. The frameworks are awesome. They've served this country incredibly well. It's the individuals running the institutions that are the problem, not the institutions themselves. We don't need to rip down the institution. We need better checks and balances in them, and we need to put the criminals that did this stuff. We need to make sure that they get handed, they get dealt with properly, whatever that is, whatever the laws are. But this whole concept that all these institutions are all broken, no, they're not broken. They've been manipulated. We've been cheated, all different ways. And I think that's extremely important to distinguish between the two. Now, keep in mind, I am working with some organizations on this voter stuff. I'm going to be kind of shifting my attention away from the voter stuff now that I do think we are going to get the results that we're hoping for. I'm very, very optimistic. I'm the most optimistic I've ever been. And so I've identified some folks, one in this organization in Florida called Defend Florida. And they're also, I think, Defend the Union. They're working on building out these phantom voter scores, not just for their state, but I said I'll show them how to do it as long as they help other states that need to have their data analyzed and so forth. So that's the deal, folks, is this is so as this all kind of happens, now I'm going to be doing the videos again every day, and I'll be explaining what's going on in the stock market. There weren't a lot of companies reporting today, but as I kind of explain, the stuff in these economic reports, we'll kind of go under the hood. We'll look at the numbers, and hopefully, as we do this and we kind of share some of this with regards to the data sets, okay, you can look at some of these frameworks for your community, because that's the bigger goal I have. I'm hoping that people start digging into the data of their county and their town and so forth, and use some of these frameworks and get involved and find out what are you guys talking about? How is this community growing at 1% a year, but you're saying we owe 7% more per year in debt? That's bogus. Who's been lying here? And that we all need to examine everything nationwide for how much corruption might be taking place. And it's not going to be a pretty process. There might be a bunch of people that'll be going to jail for all the stuff that they've been doing, but we need to get everybody involved, to do this, and hopefully, we can all make a difference, because I do agree. General Flynn made it very clear, and I think he's spot on. For all of this stuff, we have to prevent the communist takeover of this country. Not government bureaucrats. We, the people of the United States, need to get involved and prevent this type of nonsense, this attempted takeover of the United States through fictitious bookkeeping, okay, where they act as though we owe them more money than we owe them. Think about how crazy that crime is. They literally created a crime to make it look as though we owe trillions of dollars that we don't owe to try to steal this nation from us. Let me say that again. Corrupt communists have tried to, within our own government, who've infiltrated our government, and maybe these people are collaborating with these communist wannabes or communists that want to take over this country, to collaborate to create a lot of fictitious debt to make it look as though they own the country, and they don't. Okay, because it's not real. And like I said, I'll say it once, I'll say it again. Let's see the damn receipts. Okay, I want to see where all this money supposedly was journaled, and which company made the money, and where are the taxes that were paid, and how much income was paid out to people that supposedly earned all this money. You can't show us those numbers. It doesn't exist as far as I'm concerned. It's fictitious. So anyways, folks, I hope everybody enjoyed me coming back on this, and I'll let you know. I'll see you guys all tomorrow at 11:30. If on Telegram, I'll post if YouTube is back up. Otherwise, if for some reason it's still not back up by tomorrow, I'll do another Vimeo until it is up. And then otherwise, I'll try to get more familiar with Rumble. Rumble's a little, it's a little clunky, but I think that we need to, get these videos out and get people going. So, all right. I hope everybody has enjoys the rest of their afternoon, and God bless you all. And I will see you tomorrow. Have a good one. Thank you.